Hello guys, welcome to the YouTube channel. So guys, for those who let me come here. For those who are not aware, we took a sell trade today there, and what happened, we hit stop loss. I'll show you why. The reason is because of the CPI, right? So let's go to the calendar and see what the CPI numbers mean. So when you come to the calendar, the CPI itself, what did it do? It decreased, right? It decreased. So it was expected to be at 6.6% here, but it went at 6.5% there, right? So this is year on year, this is month on month, right? So they both decreased, right? So what happens in the market when such things happen? You come here. When you get here, you will see, let me get to the indices first. So on the Nasdaq 100, what did it do? When the CPI news came out, it went up, right? So up, so did the US 30, so did the German 30, so did pretty much everyone, France 40, everyone, right? But what did the currencies do? The US dollar, it did what? It crashed, right? A little bit. So what does the CPI mean? The CPI in its essence, the acronym means the consumer price index, right? Consumer price index. So this is a measurement of how much the consumers are feeling at the till points, right? At the paying points, meaning that how much money are they willing to spend on goods? Do they feel like the goods have increased in prices or the goods have not increased in prices? Okay, so we can establish that what it means, there's an inflation, right? So if the CPI is going up, that means inflation is also going up. When there's an inflation, that means things are getting what? More expensive, right? What does the government do? The government takes interest rates where? Up, right? When they increase the interest rates, what does that mean? That means there's going to be less money in the system, right? So when there's less money, those products that were inflating are not going to be bought anymore. Meaning people who are selling things now have to reduce the prices, right? So that they can be sold. That's why they increase interest rates and therefore decrease inflation. But now, in the case of today, instead of going up, the CPI, instead of CPI going up, what does it do? It went down. Meaning, people are basically saying there is no increase, right, in prices. They are basically saying the prices are still low, right? If prices are still low, what does the government do? They say, okay, no need to increase interest rates. That means people still have money, no need to increase the interest rate. In fact, they do what? They lower the interest rates. When they lower the interest rates, what happens? That means there's going to be more money in the system, right? So as a result, if people have more money in the system, what does it do? That means they're going to do what? They are going to buy shares, buy stocks, buy products, buy things in the market, right? And as a result, companies are expected to make more money, right? When they make more money, you'll see it in this increase of their share prices, or in this case, the increase in the what? In the index, right? This anticipates that what people are going to buy more products, therefore must start rising now, or rather, the companies that are inside the index, they're going to start selling more things, products, and as a result, the index will go up. So, as you guys know, as the Americans go up, the rest of the world does the same pretty much. So, what does it mean for currencies? In currencies, it means if people are saying, okay, well, there's still enough money in the market, that means there's too much supply money in the market, which means what? People can still go buy, right? People still has got a lot of money, which means there's too much dollars in the market. As you guys can see, the CPI said, like the consumer says, what? There's still enough money. There's no inflation, hence it's low, right? So as a result, because of the, say, dilution right, of many dollars in the, rather saturation of many dollars in the market, what does it do? It decreases the value of what? Of the dollar. Hence you see the rand performing good against the dollar. But so again, that, I hope it makes sense in case of the thing of the indices, because we trade less currencies and more indices. So I just want to quickly show you guys, sorry for the noise outside. So I just want to quickly show you guys why we took a sell. We took a sell because the anticipation for what? For this thing, for the CPI, was that the CPI is going to go high. As you guys can see, the previous was 6.4, the expected was 6.6, but unfortunately it did not pass the expected and stayed at 6.5. Therefore disappointing for the thing, for the indices. Well, our analysis, my analysis, sorry. So as a result, it spiked and we hit our stop loss, right? My analysis was that because the expected one was to increase, but in this case it didn't, it's going to bounce back here and come down. But unfortunately we were wrong today, but I hope you guys learned a lesson. And yes, next time when you see it, you can see what's happening. By the way, you can use the CPI to predict what the interest rate is going to do, right? As you guys have seen what happened, the CPI went up, sorry, the CPI went down, meaning that the interest rates are more likely to be kept low. But again, CPI is a monthly indicator, so we keep waiting for the actual interest rate when they do come, and we can average the CPI to do it, to predict the interest rates. So again, that's another tip. Looking forward to the interest rates, but the next CPI, be aware of how the CPI affects the market. Thank you guys for subscribing, and unfortunately we took a loss today, as you guys can see, but hopefully we're gonna come back much stronger. Anyway, cheers guys, have a good one.